Welcome to the deep dive. Today, we're really cracking open the world of international trade.
Yeah, it's a big topic, definitely.
And to help us navigate it, we're using insights from a report by Cognitive Market Research. It's called Navigating the Global Trade, Key Trends and Insights in International Trade.
Right, that's the one published back in September 2024 and updated just this past March 2025.
Exactly. And our goal today is pretty simple, really. We want to give you the crucial insights why trade exists, how it works, why it matters, you know, without getting totally lost in the weeds.
Hmm,
We know you're here to get smart fast. So that's what we're aiming for.
that's the plan. We'll pull out the key nuggets from this report, try to bring some clarity to what can seem like a pretty complex subject.
So you walk away with a solid grasp of international trade, how it ticks, and its role today.
Exactly. Its significance in our interconnected world.
Okay, so let's jump right in. Fundamentally, why do countries even trade with each other? What's the point?
Well, according to the report, the absolute core idea is comparative advantage. It's about countries capitalizing on what they're naturally better at, relatively speaking, to boost economic efficiency and ultimately growth.
So, like, different countries have different strengths.
Precisely. Some are better at making cars, others at growing coffee. International trade lets them specialize in what they do best.
Ah, specialization. So everyone does their thing and they swap.
That's pretty much it. Countries concentrate on producing what they're most efficient at, and then they import goods that other countries can make more effectively.
And the benefit of that is,
Well, it leads to increased productivity overall. It can lower production costs. And for you, the consumer, it means a wider choice of goods, often at lower prices.
makes sense. If someone else can make it better and cheaper, why wouldn't you buy it from them? But how does this fuel the bigger economic picture?
Well, it opens up completely new markets for businesses. Suddenly, they're not just selling domestically. This means more potential sales, more revenue.
Right, a bigger pool of customers.
Exactly. And that bigger market reach, it actually pushes innovation too. Companies have to adapt, cater to different tastes, different needs around the world.
Okay, that's interesting. And it's not just physical stuff crossing borders, is it? The report mentions movement of like capital and know-how.
Oh, absolutely vital. International trade isn't just about boxes on ships. It facilitates the flow of capital through foreign investment, the transfer of technology, the sharing of knowledge, and best practices.
How does that work?
Think about a foreign company setting up a factory or adopting a more advanced manufacturing technique learned from an international partner. This exchange can seriously upgrade domestic industries, boost the whole economy, and eventually lift living standards.
So that's the why. A powerful engine, potentially. What about the now? What's the current state of global trade? Any recent snapshots?
Yes, the report actually pulls out a fast facts using recent WTO data. It seems after staying pretty flat in 2023, the volume of global merchandise trade picked up in the first quarter of 2024.
Oh, okay. Picked up how much? Give us the numbers.
Yeah, so compared to the quarter before, it was up 1.0%. And looking year over year, compared to Q1 2023, it was up 1.4%.
1.4%. Okay.
And that's the average of both exports and imports.
Right. So some positive minimum there. Good. Now, the mechanics. How does all this trading actually happen? Is it just, chaos?
Huh, no, not quite chaos. Usually it's a pretty structured process, or at least it aims to be. It typically kicks off with market research. Serious market research.
Okay. What does that involve?
Businesses need to figure out, is there demand? Who's the competition? Which markets even make sense? And, critically, they have to get their heads around the local rules, regulations, tariffs, any barriers right from the start.
So you can't just like ship a container and hope someone buys it.
Definitely not advisable. Once a market looks promising, then comes the phase of setting up agreements and logistics, negotiating contracts, agreeing on sales terms, figuring out shipping, insurance.
Ah, the nitty-gritty.
Exactly. And clear communication with your international partners is absolutely key here. You need to be on the same page.
Makes sense. You need to know who's doing what, when, how, what's next.
Then you hit the documentation and compliance stage. This is where you're preparing and submitting all the paperwork, export licenses, customs declarations, bills of lading. The list goes on.
Sounds like a lot of forms.
It can be. It's all about meeting the rules, both where you're exporting from and where you're importing to. After the goods ship, they hit customs clearance in the destination country.
Where they check everything over.
Yep, inspections, verifying the shipment matches the documents, making sure it complies with their import rules. Only then can it be delivered to the buyer.
Okay. Seems like a hurdle. And is that the end?
Not quite. There are post-trade activities too. Managing the payment, handling any disputes if they crop up, which they sometimes do, and then, importantly, looking back at how it all went, evaluating the process to see how you can do it better next time.
Continuous improvement. Important for keeping those relationships going, I imagine.
Crucial for long-term business, yeah.
So it's a whole chain of events. What are the underlying things, the components that actually make this global exchange possible?
The report breaks it down into a few key things working together. First, obviously you need those trade agreements and contracts we mentioned. They set the terms price, delivery, who's responsible for what helps avoid arguments later.
Right. The rule book for the deal.
Exactly. Then there's logistics and transportation, the actual physical movement, managing the shipping routes, maybe warehousing, and definitely handling all those customs procedures correctly.
Can't trade if you can't move the stuff. What else?
Money, financial transactions and payments, getting funds across borders safely. This involves things like currency exchange, maybe bank guarantees or letters of credit to make sure everyone gets paid and reduce the risk.
Always important.
And again, documentation, invoices, bills of lading, certificates of origin, all that paper, or increasingly digital paper needed for customs and legal compliance.
We keep coming back to the paperwork.
It's unavoidable. And finally, tying back to the start, that market research and understanding regulatory compliance. Knowing the market demand and making sure you're playing by the local rules is fundamental for things to go smoothly.
Okay, so it sounds like a well-oiled, if maybe complicated machine when it works. But I assume it doesn't always work perfectly. What are the challenges, the limitations?
Oh, absolutely. There are definitely hurdles. Trade barriers are a big one. Think tariffs, taxes on imports or quotas, which limit how much of something can be brought in. And then there are non-tariff barriers, which can be more subtle.
And these barriers cause problems.
They can certainly lead to trade disputes between countries. And they make imported goods more expensive, which hurts their competitiveness in the market.
Right. And navigating all those different rules in different countries must be tough, too.
Extremely. Compliance is a major headache. Keeping up with diverse regulations, different standards, it can cause delays, add significant costs. It's complex.
What about bigger picture stuff, like instability?
That's another huge factor. Economic instability, political unrest, big swings in currency exchange rates, even things like economic sanctions, they can all throw a massive wrench in the works, disrupt trade flows, create huge uncertainty for businesses.
Yeah, we've certainly seen how global events can ripple through supply chains recently.
Exactly. The report flags the risks tied to relying on these complex global supply chains, things like natural disasters, pandemics, geopolitical tensions. They can expose businesses to big financial losses and major disruptions. It really underlines the need for very careful planning and good risk management.
So with all those challenges, what role do things like trade agreements and partnerships play? Are they supposed to help smooth things over?
That's precisely their purpose. They're designed to reduce those obstacles and create a more predictable, stable environment for trade.
How do they do that?
Well, these agreements, they can be just between two countries or regional like the USMCA or even global. They typically aim to lower or eliminate tariffs, get rid of quotas, and simplify those customs procedures we talked about. Make it less bureaucratic.
So basically clearing the path.
Yeah, making it easier and cheaper for businesses to trade across borders, which in turn helps them get into new markets and boost exports.
Does it go beyond just tariffs and quotas?
Oh, yes. Many modern agreements also include rules to protect intellectual property rights, which is huge for innovation. They push for more transparency in how trade is conducted and often set up common regulatory standards. It's all about fostering fairer trade practices.
And that stability must be really valuable for businesses trying to make long-term plans.
Hugely valuable. That predictability encourages companies to invest. It fosters economic cooperation because they can operate with more certainty. Plus, these partnerships usually set up ways to handle disputes when they arise, which helps keep the commercial climate stable.
Okay, so agreements help grease the wheels. What are the big forces actually driving the international trade market right now? What's pushing it forward?
The report points to several key drivers. First, just the ongoing trend of globalization and free trade agreements. More agreements, like the ones you mentioned, USMCA, RCEP, CPTPP, they cover huge portions of the global economy and really fuel market expansion by lowering barriers between members.
Makes sense. More connections, easier trade.
Then there's the massive growth in digital trade and e-commerce. This is a game changer. Platforms like Alibaba, Amazon, Shopify, They've made it so much easier for businesses, even really small ones, to sell internationally.
Right. Suddenly your potential market is global, just need an internet connection.
Pretty much.
Yeah.
The report probably has some figures on just how much that's boosted cross-border volumes. Another driver is infrastructure development. Better ports, more efficient logistics hubs, smoother digital payment systems. All these physical and digital infrastructure improvements make trade faster and cheaper.
So the plumbing is getting better.
You can say that, yeah. Then there are government policies and incentives. Things like tax breaks, subsidies, programs specifically designed to encourage exports, governments actively trying to help their companies trade more.
A bit of a push from the top.
Exactly. And finally, technological advancements. Across the board, really. AI, blockchain for supply chain transparency, automation in logistics and trade finance, all these technologies are streamlining processes, cutting costs, making global trade more efficient.
Wow, okay. So lots of forces pushing things forward. Let's bring it back down to a single business. How does actually doing international trade help them specifically find new opportunities?
Well, the most obvious way is market access. It lets businesses reach customers way beyond their home country's borders. That alone unlocks huge growth potential.
More customers, more sales.
Exactly. Tapping into foreign markets means a bigger customer base, which usually means more revenue. The report probably gives examples, but think of a company successfully selling in 5 countries instead of just one. Their operations expand, their revenue streams diversify.
And that diversification sounds usable. Less risky than having all your eggs in one basket.
Precisely. Relying only on your domestic market makes you vulnerable if, say, consumer tastes change there, or the local economy hits a slump. Being in multiple regions provides a buffer, potentially a more consistent income flow.
A bit of a safety net.
And it can be a competitive advantage, too. You can capitalize on different trends, different economic cycles happening in various parts of the world at different times.
And does engaging internationally change the business itself?
Oh, definitely. It forces innovation and adaptability.
Right.
You often can't just sell the same product the same way everywhere. You have to adjust your marketing, maybe tweak the product itself, change your operations to meet local needs and rules.
So it pushes them to evolve.
Absolutely. And that whole process, learning, adapting, innovating for different markets, it often leads to developing entirely new products or services, making the company stronger, more competitive, more agile overall. Not just abroad, but potentially at home too.
Right. So pulling this all together then, we've seen international trade is really about playing to strengths, specialization for economic gain.
Mm-hmm.
It relies on a pretty structured process, key components like logistics and finance, but it faces real challenges, the barriers, instability.
Yeah, complexities are definitely part of it.
Yet trade agreements try to smooth the path, and powerful drivers like technology and e-commerce are pushing it forward, opening up significant growth opportunities for businesses willing to engage globally.
That sums it up pretty well. It's dynamic, complex, interconnected, offering big rewards, but requiring careful navigation.
So on that note, maybe a final thought for you, our listener, to chew on. We've talked about the drivers today, but considering how interconnected everything is, what emerging trends, maybe things we haven't even touched on much, might fundamentally reshape international trade in the next few years?
Ooh, good question.
Yeah, what could really change the game for businesses and for us as consumers? Something to think about.
Definitely food for thought.
Well, thanks for taking this deep dive into the world of international trade with us today.
My pleasure.